Hello again, and welcome to the third video in this insurance advice series. My name is Paul, and I'm an insurance advisor based in Christchurch. In the last video, we spoke about life insurance, specifically the four components of a life insurance policy that you need to be aware of for it to work properly for you, and I demonstrated how to save money on life insurance with Partners Life. But in this video, we're going to talk about illness cover known as trauma insurance. We will discuss what it is, why it's helpful, things to watch out for to ensure that you get paid a claim, and why Partners Life has the best trauma insurance available in New Zealand. So trauma insurance can be a very tricky product to wrap one's head around. So this sometimes leads to situations where people really do not understand what they are actually protected for. Trauma insurance pays out a lump sum of money if the insured person is diagnosed with a covered condition. The vast majority of claims in New Zealand are for cancer, strokes, and heart disease, but Partners Life covers 48 conditions on their trauma policy, which makes them one of the best in the country. But I'm going to make the case for why I believe they are the best, and why I myself have trauma cover with them. Why should you consider having trauma cover? Well, statistically, it's rather rare that somebody just suddenly dies. It's more likely that a person will be diagnosed with some sort of a disease first. Now, trauma cover can help to cover certain things like income, or to reduce debts like a mortgage, or to help pay for treatment of the disease, things like this. So why is Partners Life the best trauma insurance in the country? I'm going to go so far as to say that if your trauma insurance is not with Partners Life, you can seriously do better. And I will prove it to you with independent research. I could probably write a book about all this, but let's just focus on 5 key points. Consider that Partners Life's list of covered conditions is staggeringly large. You can download their brochure using the link under this video, but let me pull up their brochure so you can get a sense of how large it is. Just look at this. So here is their trauma brochure. I'll zoom in a little bit, and here are all the trauma conditions that are covered. Things like aortic surgery, blindness, cancer, comas. The list goes on and on and on. It actually continues on the next page. Few more conditions, including total and permanent disablement, things like this. It's a staggeringly large list. Second point, Partners Life's policy wordings are the most generous in the country. What do I mean by this? But think about it. There are so many insurers out there, such as AIA, Cigna, Fidelity Life, Astron. Even the banks have their own trauma covers. But I will say that none of these companies have the policy wordings as generous for you as Partners Life does. In fact, I will even be so bold as to say that if an advisor has taken away your policy from Partners Life, especially in the last year or 3, then they've done you a disservice. Let's take a look at some independent research from QPR Research. So, Quality Product Research Limited. They are the people that out there help us advisors to analyze the different policy wordings against each other. They are independent, so they've got no dog in the hunt here. And in this report, I've got companies such as AIA, AMP, Astron Life, Cigna, Fidelity, Partners Life, all the big boys out there. And you would notice that they have ratings. Partners Life has a 100% 5-star rating. What does this mean? It means that if they've gone through the list of different things that are covered, they've analyzed each thing and they give them a score, a number. The higher the score doesn't mean the higher the premium, it just means the more generous the policy wording. What this means for you is that you're more likely to meet a claim. So we can probably go down deep with a meeting together on an online call as to what all of these things mean. But the take-home message is Partners Life is independently verified to be the number 1 in New Zealand when it comes to trauma insurance. So, moving on, let's dig into some details. Partners Life automatically includes total and permanent disablement as a covered condition with their trauma policy. This means that if something happens to you and you cannot ever do your own job ever again, you can claim, even if that diagnosis is not one of the 48 conditions listed on the policy. For most other insurers out there, this awesome benefit is not automatically included. You would need to tick a box and add it in and pay more premium for it. So if you are going to get a quote from, say, AIA or Fidelity Life, just make sure that this quote includes total disablement cover to make sure that you're actually comparing apples with apples. What's more, Partners Life automatically includes $50,000 of trauma cover for your dependent children between the ages of 4 months and 21 years, and it's free. This cover does not come out of your own trauma cover. It's $50,000 on top of your own trauma cover benefit. And unlike most other insurers, it doesn't matter how much trauma cover you have as the parent. Even if you have $10,000 of trauma cover, your dependent child is still covered for $50,000. Now, banks don't typically offer this as part of their trauma covers, so check out your policy wordings if you have trauma cover with the bank. Now, this last important point, I cannot stress enough how important this is. Partners Life will cover any cancer diagnosis, even an early stage carcinoma in situ, and they don't restrict the cover to only gender-specific cancers. What do I mean by this? I mean that if you have cancer, and if the cancer is early stage, then most insurers will not pay out unless that early stage cancer is in a very specific place in the body. This is a serious problem and is worthwhile me highlighting the consequences of this. Just look at this policy wording from AIA. AIA is very popular, but would I use them to protect myself from cancer? No. Why? Well, let me read you this. So this is the AIA policy wording. I'll go to page 10 that talks about early cancers. With them, you have to tick a box called an early cancer upgrade benefit and pay for it. What does this mean? So it says AIA will pay an optional early cancer upgrade benefit if the life insured suffers for the first time one of the cancers listed below. What are those? Let's scroll down. And here they are. The optional early cancer upgrade benefit covers carcinoma in situ of the following sites. Only these sites. Here. The carcinoma in situ must be positively diagnosed by biopsy and be classified as TIS according to the TAM staging, blah, 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 blah. But the point is, it's only the breast, cervix, vagina, vulva, ovary, and fallopian tubes. For women, what about another cancer? What if it's bowel cancer? What if it's early stage, kidney cancer or something else? Doesn't matter. If it's not one of these, can't claim the early stage cancers. With Partners Life, yep, you can. I'll show you in a minute. So moving on, what else would it pay for? Chronic lymphocytic leukemia, malignant melanoma, less than 1 millimeter of thickness, and the malignant tumor of the prostate described as TNM classification T1, so leukemia, melanomas, and tumors of the prostate. What about all the other cancers? If you have an early stage carcinoma in situ of another cancer, then you can't claim. Now, I'm no cancer specialist, I'm not a doctor, but I would imagine you can get early stage cancers in a lot of other sites in the body. This is a serious problem. Let me call up Partners Life's wording. I think they're on page 4, where they talk about their cancers. Scroll down. Right, here's the cancer wording. It says the following tumors are excluded, which you can go into a little bit. These are typically earlier stage things. But if you scroll down, they have something called a diagnosis criteria. That means early stage things. They've got the same things: lymphocytic leukemia, prostate cancers, malignant melanomas, non-melanoma cutaneous squamous cell carcinoma of the skin, lips, and ears. It goes on and on. But have a look at this over here. The presence of carcinoma in situ. You can read more details, but you're going to notice there's no list. There's no list that says only prostate or cervix or fallopian tubes or ovarian issues. There is no list, which means if you get an early stage cancer in anywhere in the body, these conditions are met, you can claim. Big, big deal for me. All right, moving on. I want to show you how to save money on trauma insurance with Partners Life. They've got 2 different types of traumas. They have trauma cover and a severe trauma cover. They work basically the same, but the pricing is very different. So let me pull over the quoting tool. You can see this is Partners Life that we brokers have access to. Now let's just use myself as an example. I'm Mr. Paul de Klerk, born the 24th of December 1978. Yes, it is my birthday. I'm a non-smoker and I am an insurance principal. And yes, I work more than 25 hours a week, sadly. Let's just add in some life insurance here and some of the trauma covers as well. I'm going to do trauma and severe trauma. Let's just put in, say, $500,000 of life, and I'll put in, say, $100,000 of trauma insurance. Tick all the boxes. I'll explain what they mean in a minute. Okay, take a look at this. For me, $500,000 of life insurance, $100,000 of trauma insurance, and another $100,000 of severe trauma insurance would be $102 a month. But you're going to notice there are two different types of traumas here with two very different levels of pricing. First things first, what does accelerated mean? Accelerated means the $100,000 is going to come out of the life insurance benefit. So if I claim $100,000, my $500,000 of life insurance would less $100,000. If I died within 12 months, my family would get the remaining $400,000. Now, if you have cover typically with a bank, and sometimes other insurance companies, private insurers, I see the structure issue where the life insurance and the trauma is connected like this. What you don't want to do is end up in a situation where the life insurance benefit is permanently suppressed forever. Because once you've had a trauma claim, it's typically for some very serious things, cancers and heart attacks and things like this. You virtually become uninsurable most of the time after the event. So if you're trying to get more life insurance later, it becomes problematic. But you'd notice that here with Partners Life, I have a life buyback. What this means is if I don't die within 12 months of getting the trauma money, then my life insurance will buy itself back and go back to where it was. It's something you apply for, but I would remind all of my clients at that stage, when it's time that they can be able to buy up their life insurance again and put it back where it was. Now, people like banks, I'll use the BNZ as an example. So many people are there. They always accelerate their cover to the life insurance, always. The problem is they have no life buyback option. So what this means is you're typically paying for two products and run the risk of being able to claim only one. It's not great. Now, I have no problem accelerating things because it does make the premium cheaper so long as you have the life buyback option ticked. Cannot tell you how many times I see a policy, no matter who the insurer is, and that option is not ticked and the client is none the wiser it's even an issue. The other thing is I've ticked trauma buyback. What does that mean? It means that of the 48 conditions that each trauma is covering me for, I can buy it back if it doesn't claim my life within 12 months. Buy it back means the trauma cover reinstates and goes back to where it was. I was covered for 48 things. What I was paid out for, let's say it's cancer, I wouldn't be able to claim for that again, but I can claim for the other 47 conditions, and so on and so forth. In other words, it's not just a one-time claim and then it's all over. I'm uninsurable for the rest of my life. Now let's get down to some other details. Trauma cover, $42 a month. Severe trauma, half the price, more than half the price. What's the difference there? Why is that? Well, if you think it through, trauma cover covered all the earlier stage things. They cover the same 48 conditions or the same list of conditions for both things, but there are a certain number of those 48 conditions that need to be much more severe in order to qualify for a claim. Now, the increase in severity means it's less likely to happen. But if it does happen, that's basically the worst case scenario. We need the most money. So, for example, let's just say you had a little heart attack versus a big heart attack, right? The little heart attack, you could not claim it under the severe trauma because it's not severe enough, but you can under this trauma. If you wanted to have both of these traumas included in your policy, you have a small heart attack, then presto, you can get paid your claim. What if it happens again later and it's a very big heart attack? It's severe. I can claim another $100,000. So it's a great severity-based option. The worse things get, the more money you can claim. However, trauma cover costs more because it's much more likely to happen. Small cancers, small heart attacks, not as a severe stroke. I once had somebody in their late 20s who had a stroke, right? It wasn't severe enough to be paid for under severe trauma, but they were paid for under that trauma cover. More likely to happen. Now, if you think further, just think about cancer, right? Let's just say it's a little skin melanoma. A small little melanoma qualifies for a claim under trauma cover, but have you really suffered loss? You've probably gone to the doctor, get that critter cut out, and you're fine. No further problems. Didn't even have time off work. But yes, you can claim the money. That's why it costs more. But what if it wasn't that small? What if it was a big melanoma? It's not just in the skin anymore. It's riddled throughout the body. Or you're getting chemotherapy, things like this. In other words, it's more severe to be able to qualify for a claim. That's when you need more money. You can claim the monies again. You don't have to have both options. You can choose. Now, if budgeting is an issue for a client, I would always recommend to first get the severe trauma cover, because those are the worst case scenarios. It's a big heart attack, it's a big cancer, whatever it is, and that's when you need the money the most, and it helps that the premium is cheaper. That the full trauma cover is great. Maybe you won't have it for as much as $100,000, even the early stage, say $20,000, whatever the budget allows. At least you can get some earlier stage money, but as things get worse, you can be able to claim more. That's what I mean by a severity-based option. Not all insurers do this. All right, let's just talk a little bit more about this severe trauma policy. Severe trauma covers the same conditions as trauma cover and can pay the same lump sum benefit, as I've just shown. It is cheaper than trauma because the diagnosis must be more severe for 11 of the covered conditions, such as cancers and strokes. This gives you more flexibility to structure your policy according to your budget and needs. Severe trauma is great for people who are older. Very often they can pay less premium, but they can still have cover, and it helps to create a severity-based solution, allowing you more cover if your diagnosis is severe. Just to recap on the standalone versus accelerated trauma, standalone trauma does not reduce your life insurance when claimed. Accelerated trauma does reduce your life insurance benefit when claimed. It makes the premium cheaper. I would always recommend, though, make sure that your existing policy includes some kind of a buyback or reinstatement. Typically, if you're with a bank, especially the BNZ, they do not offer that as a cover option. All right, some more important information. Under this video, you'll see the Partners Life brochure and policy wordings. The links are under the video. Remember, if you need a quote from me, just click the box underneath this and you can fill out a very short form. I'll fire you off a quote as quick as I can. That's it for me in this video. If you have any questions, please reach out, use the website and send me a question. I'll be happy to answer it as quick as I can. But until next time, take care, guys.